John Deere as a company is in a really interesting spot. I think it's displayed on the chart, right? One thing that clearly sticks out from the 2021 highs, it's just ran sideways. I mean, it's bounced up and down, but it's just ran sideways. So, I mean, it's outperformed the S&P 500 over the 5-year time frame. But over the last 3 years, completely sideways. Like, this is weird. Most stocks do not run sideways like this. They just don't. Like, it's almost uncanny. I mean, the 1-year chart, it's a 5% difference. Like, that's crazy. But anyways, why is it doing that? Basically what happened is they had a really big boom during the 2021 period. They were doing great, clearly. And then they've had stagnation, and they've technically grown a little bit, right? The PE, ratio has gone down. So over this time period, it's not like the sales are exactly the same. However, in terms of share price, it basically has. And also, it pays a decent dividend as well, about 1.5%. That's really pretty good, or at least average. So it's nothing to scoff at. But what do I think of this stock? I have mixed feelings, right? I don't necessarily think. I don't know. It's tough. Let's dive into it. Let's check out the forward P. 16. So next year's kind of projected a little bit worse. But on the bright side, this company is priced in for not a lot of growth, right? Because the S&P 500 average is about 28% right now, 27%. So this is a company that, if you take the forward PE, it does have a reasonable 30 to 40% discount to what the S&P 500 average is. So you can expect this company to not do particularly hot, but if it recovers and then in a year or two has good outlook, you could still outperform. So next year being not great isn't necessarily a terrible thing. However, there's a few things that are going on with the stock behind the scenes. They have been doing a sizable amount of layoffs, not layouts, layovers. They've been doing a significant amount of layoffs. So they had a huge hiring spree, and then they've been cutting people. Not a great sign, although for stock price, doesn't always hurt, right? Because you're cutting some costs. So you can see that reflected in earnings and PE ratio and earnings per share, but not necessarily because you're making any more money. It's just that you're not spending as much. There's also controversy with wanting to move production to Mexico. That's kind of an open secret with them. I actually know someone who works for John Deere, and it's kind of an open secret there as well, that they're wanting to move a lot of automation to Mexico, which sounds decent, right? But the brand of John Deere is kind of like an American brand, right? So there's controversy with that, where maybe a lot of their people, customers, aren't necessarily super keen with that, right? They just aren't. It's not a great look for them personally, for their customer base, because it is a lot of farmers, rural, more American centric, or just patriotic in general. They like things made in America. Not that everyone doesn't, but more so with that clientele than the average, right? So all that accumulates, and I'm sitting here and I'm like, I don't know. I was sitting here 4 or 5 months ago, and I was planning on putting a decent amount of money into John Deere. But the more I let it sit and I just look at it, I'm not sure. I'm not sure, right? I don't know. I think it's going to do fine in the long term, 3 to 5 years. But I'm just sitting here thinking, unless they guide really well next year, why do I have to jump in right away? They've actually beat pretty substantially in most of these. So maybe you can expect a little bit higher. Maybe you can even expect sideways completely, right? With layoffs and revenue and all that, maybe they go completely sideways. But I don't know. And if they guide well for the next year, it's going to jump. But I don't know. I'm just thinking personally, John Deere is one. You put a pin in and you just wait. You wait. You don't want to wait too long, right? Because then it's going to shoot right back up. I am a long-term investor. I'm not necessarily a trader. However, I have finite amounts of capital, right? I don't have $10 million. I can't throw 5,000 at Deere here and 10,000 at TSM there and 5,000 at whatever company, right? Walmart, Target, every company. I don't have infinite amounts of capital. So when I'm buying a stock, I want to make sure it's a stock that I think I either truly believe in, right? Or if it is undervalued, it has to be really undervalued. And that does happen, right? And I'm not necessarily doing that as a trade. It's still a company I wouldn't mind holding long term. But I have to sit there and think, is this where my capital is best used? And I sat there and I just kept delaying it. I delayed it literally, I think, at least 6 months, maybe even 9 months. And I'm just like, I think my capital is better elsewhere. So that's where I'm sitting today. And I don't necessarily hate Deere. I think it might be fine. I think probably in a year it's probably still running sideways. I don't know that. It could be up 200%. It could be down 100%. Well, it could be down 100%. It could be down 50%, whatever. That's fine, right? You win some, you lose some. I'm not going to lose sleep over that. But I don't know if today I can say, just with all the things, it's just iffy, right? It just is. Something's not sitting right. Here. Some competitors, at least they have a pretty, it's only 100 billion. But yeah, they've the best thing about it is just the PEs. It's low enough, right? It's not too worried. Schwab thinks it's going to do better than average. It's rated a C, but 39 percentile. If the average stock does, 5, 6, 7%, it's going to do slightly above that, so that's still pretty good performance. 2-star wide, I'd agree that there's not a whole lot that do what they do. It's not like there's 20 other tractor brands you can go out and buy from. 2-star, buy. Long, buy. Decent ESG score. Dividend hasn't increased, which is a little concerning. But at least it's not decreasing either, right? Like I said, risks. I mean, it's also, they're just not selling a lot because, corn and soybean, all that's not up a lot. And that's really into the weeds, right? But it really is kind of just dependent on how prices of that are moving, how are farmers doing. It's just, this is here. Let's look at the 10-year. Yeah, I mean, it's performed really well over the last 10 years. It's definitely beat the S&P 500. Just it's so much of that growth is just isolated in a few spurts, which as an investor can just sometimes be unsettling, right? So it's almost like we're stuck in that, waiting for the next spurt. And it took 4 years, and it took 3 years, and it's already been 3 years, but it may take another year or two, right? I don't know. If you're looking to invest in John Deere, I don't think it's a bad play. For me personally, I'm probably not going to throw money at it today, But I think it's a fine stock. There's not a whole lot in what they do. It's a decent diversification to an industry that doesn't have a whole lot of competing players, right? It's just not something that's screaming out to me. If you like it, that's great. But I'm going to sit in the sidelines for a while and keep a vigilant eye. And if I see something, I'll take a jump in. But anyways, if you agree or disagree with me, let me know in the comment section down below. Leave a like, subscribe, whatever it may be. I guess I didn't really look at analysts, but who cares what analysts? Nah, I did. Hold. Okay, so I agree with them. Anyways, I'll catch all you guys later. See ya.